Look who's here. Stuart Varney is the host of Varney and Company on the Fox Business Network. Good morning to you.
Morning, Steve.
You know, last week, the stock markets around the globe fell off because of the debt crisis in Greece. And then at the last minute, Germany stepped in and said, okay, this is not going the right way. We're going to help these people out.
Right.
Why hasn't that happened here? Because our debt has exploded on a much more grand scale than Greece ever dreamed of.
We are looking over our shoulder, looking at the Europeans with this debt crisis which has already arrived, and we know that there is a debt crisis in America at some point in the future. We don't know when, but we know it's very likely to come because we can't get Social Security under control. It's paying out more than it's bringing in. Medicare, wildly out of control, and we keep on paying hundreds of billions of dollars a year on our interest on our debt. So we know that a crisis is coming at some point in the future. What do we do about it? Which politician is going to cut the benefits from Social Security? Which politician is going to cut Medicare benefits? Who's going to do that to bring our spending and our outlays under control?
Nobody who wants to get reelected.
Nope. I think you can reform Social Security, raise the age at which you receive benefits. But you see, that's way down the road. So current politicians don't pay a price. Medicare's a different story.
I mean, if you listen to a fellow named Paul Krugman, another Democratic columnist and economist, they say, Stuart Varney of the London School of Economics,
Thanks.
They say, oh, it's okay. This is not a crisis. Continue to spend. The president hasn't spent enough. We need to spend our way out of this crisis. It's not a problem. You're all out of whack,
That's
Stuart
exactly
Varney.
what Krugman is saying. He says there should be another very big stimulus package. He's not interested in whether the first $1 trillion package worked or not. No, he says unemployment is so bad, the economy is in such bad shape, we must get out there with another huge spending package. That's Keynesianism writ large.
And isn't the history of the world of empires like the United States going down because they were top-heavy with debt?
Look, we have a debt crisis. It is approaching. On one of these days, here's how it happens. Here's where the crunch comes. One day, all of those people that we're asking to borrow money from, they're lending us money. One day they'll say, wait a minute, we're not happy with this. You're borrowing too much. You're too much in debt. There's a debt crunch. A debt crunch. That's exactly right. You hit the wall, and it happens all of a sudden for reasons you cannot imagine. Sooner or later, it comes.
And you were talking about the Keynesian theory, and they go, well, it worked during the Depression, but now people are going, well, take a look at the evidence. No, it didn't.
Yeah, I mean, that's first spending package, that $1 trillion or near $1 trillion stimulus package, it didn't work as advertised, but they really want to get out there and spend to get us out of this mess. That's what they think we should be doing.